In this video, I want to teach you a special settings for MACD that nobody knows. First, we need to add two MACDs to our chart. So here we click on indicators and we search MACD. This one, moving average convergence divergence. And now we need to change the settings of these two MACDs and then combine them together in a special way. You must exactly do it based on what I am doing here. First, we go to the settings of this MACD in the top, and here in the style tab, for the fast length we set it at 34, and for the slow length we set it at 144. And then we go to the style tab and we remove MACD line and signal line, and then here we change the appearance of MACD histogram to line, and finally we set all these colors to white. Alright, we're done with the first MACD, and now we go to the settings of the second MACD in the bottom. And first here in the inputs tab, for the fast length we set it at 100, for the slow length we set it at 200, and for signal smoothing we set it at 50. And then we go to the style tab and we remove MACD line and signal line. Alright, we're also done with the settings of the second MACD, and now we must combine them together. Here for this MACD, which is in the bottom and it is in the form of a histogram, here we click on more option, and then here move to, and then we click on existing pane above. And again for the MACD with the appearance of histogram, which actually has higher values for the setting, again we click on more option, then here pen to scale, and we click on pen to scale A. Alright, now these two MACDs are perfectly combined together, and let's see how we can find trading opportunities based on this special combinations of two MACDs. This setup is more suitable for short time frames like 1 minute, 5 minutes and 15 minutes time frame, because by the help of this setup we're gonna catch sudden and short-term momentum changes that are happening in the market. When MACD histogram is red, we wait for the times that the other MACD, which we have it in the form of this white line, to go above the center line, and when it crosses back below the center line, if the bar in MACD histogram is dark red, this is a signal for opening a short position. If the bar is light red, the signal is rejected because this shows that the downside momentum is decreasing. But when the bar is dark red, it shows downside momentum is gaining a strength. And for this moment that the line goes back below the center line, we want the bar to be dark red. So in practice we could enter a short position at this point when this new candle is opened. The stop loss above the previous swing high, and the profit target at 1.5 risk to reward ratio. Again here you can see that the line went above the center line, but when it crosses back below the center line, the bar in the histogram is light red, so we don't take any action here. Moving on the chart, no more signal around here, and from here the histogram became green. And when the MACD histogram is green, we wait for the times that the white line goes below the center line, and when it crosses back above the center line, if the bar in MACD histogram is dark green, the signal is confirmed. If the bar is light green, the signal is rejected. We want the bar to be dark green, so the buy signal here is confirmed, and we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low, and the profit at 1.5 risk to reward ratio. Moving on the chart to see if there is any other opportunity. Yeah, here the white line went below the center line, and when it crosses back above the center line, the bar is dark green, so the buy signal is confirmed, and we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low, and the profit target at 1.5 risk to reward ratio. Moving on the chart, while the MACD histogram is green, the line again went below the center line, but from here the MACD histogram is red, no signal around here. The white line went above the center line, but here the MACD histogram became green, no signal also around here. Moving on the chart, here the MACD histogram is red, we have the white line above the center line at this point, and then it crossed back below the center line here. The bar is dark red, so the sell signal is confirmed, and we can enter a short position at this point when this new candle is opened. The stop loss above the previous swing high, and the profit target at 1.5 risk to reward ratio. Moving on the chart, no signal around here. Here the MACD histogram became green, and at this point you can see that the white line went below the center line, and then it crossed back above the center line at this point, but the bar is light green, so this signal is also rejected. No more signal around here. Moving on the chart, from here the MACD histogram became red, we don't have any trading opportunity around here. Here the white line went above the center line, but before crossing back below the center line, the MACD histogram became green, and here the white line went below the center line and it crossed back above the the center line at this point. The bar in MACD histogram is green, so the buy signal is confirmed and we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low and the profit at 1.5 risk to reward ratio. Moving on the chart, from here the MACD histogram is red. Here you can see that the white line went above the center line and then crossed back below the center line at this point. The bar in the histogram is dark red, so the sell signal is confirmed and we can enter a short position at this point when this new candle is opened. The stop loss above the previous swing high and the profit at 1.5 risk to reward ratio. After this trade here we had another opportunity where the white line went above the center line at this point and again crossed back below the center line. The bar is dark red, so another short position could be open at this point when this new candle was opened with the stop loss above the previous swing high, and this was also a profitable trade as you can see. And again after this trade we had another opportunity at this point where the white line again went above the center line and then crossing below the center line at this point, providing another opportunity for opening a short position at this point. And this trade is also a successful trade as you can see, where the price declined down to this point. Moving on the chart, no signal around here. We didn't have any signal also here. Here the MACD histogram became green. The white line crossed below the center line at this point and it crossed back above the center line here. The bar is dark green, so the buy signal is confirmed and we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low, and this trade is also a profitable trade as you can see. Moving on the chart, no signal around here, and from here the MACD histogram became red. Here the white line crossed above the center line and then crossed back below the center line at this point. The bar is dark red, so the sell signal is confirmed and we could enter a short position at this point when this new candle is opened. The stop loss above the previous swing high and profit at 1.5 risk to reward ratio. Moving on the chart, no more signal around here. From here the MACD histogram is green. We didn't have signal here, and here you can see that the white line went below the center line and then crossed back above the center line at this point. The bar is dark green, so the signal is confirmed and in practice we could enter a long position at this point when this new candle was opened. But as you can see, the price declined after that, hitting our stop loss. So this was a false signal, and this is the most important point that you must pay attention. No indicator or trading strategy can give you 100% guaranteed signals. Losing trades are always part of the game and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's a perfect choice for scalping and day trading. By the help of this strategy, your position size is calculated in a way that in cases like this that the price may hit your stop loss, you will only lose 1% of your trading account. I have a complete guide on this. The link is also placed in the description and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new video. See you guys in next video and good luck with your trading.